Hello there, and welcome to the Kluge Wealth Advisory Group Client Connect video for August 2025. In this video, we're going to be covering off a number of segments, including a portfolio update, a market update, as well as touching on a number of your frequently asked questions. Now, before we jump into things, there was a couple of housekeeping notes I did want to bring up. The first is that we do continue to be at a usual period of seasonal volatility. August and September typically are a little bit more volatile than the rest of the year. Now, fortunately, August so far has not been. However, it would be completely normal to see a little bit of chop and volatility in September. So just to let everybody know that that's expected and it's just part of the normal market action. The second thing I wanted to note here was that in September, we're going to be hosting a webinar with Fidelity Digital Assets on blockchain and cryptocurrency. So watch out in your inbox and I hope you'll all be able to join us. Now, let's get right into it. So in terms of the portfolios for the month of August, everything at this point on August 27th looks like August will be an okay month. Normally we would see a seasonal drawdown at this time, but it looks instead that like we're going to finish positive here as we are videoing here on August 27th. Now that could of course change over the next couple of days, but that's where things stand as of right now. In terms of what we have been doing in the portfolio, we have been making a number of changes. And all those changes are in alignment with the idea that we've been talking about, that the correction we saw in February, March, and April was really a reset of the market cycle. And so that we're actually in a new market environment. It's a lot more like early 2023 than it is like late or early 2025. So we're kind of at the beginning of a new market cycle. It's a fresh page. And we have to take a look at where we think there's going to be positive action here going forward. So in looking at that, we did make a number of changes, including introducing positions that have exposure to U.S. housing, like D.R. Horton and Home Depot, because if we were going to be seeing interest rates fall, then those sectors would definitely benefit. As well, there are some high-quality names that have lagged a bit that are beginning to show evidence of turning, such as Nike. And we did have some other names that we did need to remove, like John Deere, or CrowdStrike, that were just simply not performing, so that we can make room for names that are doing better, such as General Electric, or in the case of the reallocation of CrowdStrike, beefing up our position in JP Morgan and in Quanta Services. So we want to keep the portfolio fresh. We want to keep it aligned for the environment that we believe that we're entering and increasingly looks like that we're entering into. And we just want to leave off this segment just by saying that if you want a little more detailed conversation on this, any of the position or any of the rationales involved in the changes, as always, please reach out, give us a call. We're here to get the job done. In terms of a market update, we did see positive results in equity markets over the course of August. Now, this is a bit unusual, given that the usual seasonal pattern is that August and September show some volatility and potentially a correction. If we think back to 2023, that certainly was the case. However, in doing some research, we did find that in years where you do see a large spring correction, that markets will actually be positive potentially in August and September. So here's hoping for September, and looks like as we're filming this here today that on August 27th, that markets are positive for the month. In terms of other portions of the market, again, we didn't see really any significant action in any commodities such as oil or in the interest rate markets for fixed income. Everything remained relatively status quo. US rates might have come down a little bit, same with Canadian, but nothing really that is noteworthy here at this point. Pretty quiet for the summer in those markets. So we'll leave it right there for the time being. And of course, if there's anything else that comes up or any questions you have, please reach out and give us a shout. Now, moving on to your frequently asked questions over the course of the month, there were three core questions that we saw come up quite frequently in client conversations. The first was about market resilience and the reasons for the recovery that we've seen since April. The second was what's going on in Bitcoin. Is this normal, and where are things at? And the third was just a refresh of our market outlook. Has any headlines changed what we're looking at, and what do we see here over the next 12, 18, and 24 months? So the quick answer to these questions, which I like to include in the summary segment, is that the market has been resilient because that is completely historically normal. We saw a very, very sharp decline, and it is very, very normal that after a very sharp decline, there's a very sharp rally to offset it if there's no recession. Now, there's been no recession, so despite the fact that there have been some, shall we say, interesting headlines coming out, there's no recession. means that the market has recovered. In terms of Bitcoin, it continues to progress in its normal cycle during the halving, and we don't see anything here that should disturb our thesis here over the next few months. And finally, our outlook. The bottom line is our outlook remains positive. When we look at our technical, quantitative, sentiment, and liquidity studies, they all indicate that the tendency of the market is going to be higher. So unless we see something untowards happening or an unexpected event, we believe that the highest probabilities of the market will continue to go up. And so I have to be positive because that's the way the evidence is pointing. Now, in the next segments, we'll get into a little bit more detail on all of these. And of course, if you have any questions on this, please reach out and let us know. We're here to help. Welcome back. So over the course of August, we saw a number of questions, from you that clustered around the idea of market resilience. Looking at, is this rally real? Is the air quotes the bottom going to drop out on us? Is it sustainable? I detected a lot of anxiety about where the market is here at the moment. So I wanted to take a few minutes and discuss this. So I'm going to look at things two ways, qualitatively and quantitatively. The first thing, qualitatively, we have to go back and think about market behavior, right? And there's an old saying that I did bring back, and I am bringing back into conversations here. And some of you will remember that, and it's the analogy of the pain or the embarrassment machine. And really what that is there's an old market Wall Street wisdom that basically says that the stock market will do whatever's necessary to create the most amount of pain or embarrassment to the greatest number of people. And given the level of anxiety about the market, the skepticism, and frankly the positioning, which is positioned for a decline, it would be very, very embarrassing and painful for the market to continue to climb. So if we think of this as a machine that wants to produce the most embarrassment, or pain, then the most normal thing would be for the market to climb higher. Now that's a quantitative sort of behavioral way of looking at things, not very scientific, but it does explain the way the market has seemed to act in the past. Now, if we look at this a little bit more quantitatively, and we do look at history, we do see that there's been many of these type of what we like to call waterfall declines. So we saw a very, very sharp decline of approximately 7 weeks into April 8th, and then we saw about 11 weeks to recover into into late June. Now, the fact that there was no recession helps lead to that type of a bounce. And the second thing is that the bounce that we saw coming to April was very, very normal after one of those waterfall declines. Usually there's a ratio of 1 week down, 1.4 weeks up into recovery. And that we saw that play out almost perfectly with 7 weeks of decline into April 8th and approximately 11 weeks of rally into the week ending June 26th. So that played out very, very normally. Driving that, obviously, is the fact that, again, there was no recession. If you don't have a recession, these market drops tend to recover very, very quickly. The second thing driving this is just that earnings have been very, very strong. U.S. earnings growth was very, very strong and far exceeded expectations. So we know that if corporates are resilient and there's no recession, the market should, in fact, be higher, and that would be normal. If the market was lower, in fact, that would be abnormal. And what I do want to point out that so far, what we have seen is that a lot of the statistics I shared with you in April and May that pointed to brighter days ahead are broadly working out. They're roughly giving us a type of return magnitude in roughly the same, a time frame that is historically normal. So although it does feel very unsettled out there right now, in fact, everything that's happened is historically normal. And we should take comfort from that, the fact that we are literally experiencing a time where it feels unusual, but we are not in a situation where there's anything new under the sun. So in our conversations, we also saw a number of questions revolving around what's going on with Bitcoin and how is this trade progressing in alignment with our thesis here. So, the bottom line is that Bitcoin is behaving pretty normally, given that it is in its halving cycle. We are seeing very, very high returns. Depending on when you're into the trade, we have seen returns as much as 4x, which is, again, well within normal historical limits. And in fact, I would say, if anything, a little bit low. But there's still lots of time left in terms of the halving cycle. And we are in an environment very critically where we've seen a huge turn in terms of the regulatory environment in the United States, which is now much more friendly towards blockchain and crypto. We also have the fact that there is greater institutional adoption coming in Bitcoin. We do see large sovereign wealth funds and pension plans start to accumulate. And we're also seeing a category of companies called digital asset treasuries starting to accumulate Bitcoin at a very large scale, both in the United States as well as Europe and Asia. Now, the biggest of these digital asset treasuries is a company called Strategy, or was known as MicroStrategy. However, there's lots of different ones like this, and this again provides buying power and support for Bitcoin. So as we move forward, this is something, and we need to monitor this position very, very carefully. Bitcoin is, of course, a high risk, high return asset, and so we have to respect it, make sure that we're taking profit along the way as we have, and closely monitor the conditions so that we can ensure that we are using it to build wealth and you move your portfolio forward. Thank you. So in our final question that we're going to touch on here for the month of August in the Kluge Wealth Advisory Group Client Connect video, we're going to talk about our outlook. Now, some of my comments here are going to be a little bit, some repeats from the answer we had to the question on market resilience, but I think it's worth touching on again. So the bottom line of our outlook is that we remain positive on the path ahead, because that's what the evidence says. When we look at studies of sentiment, studies of quantitative pattern, as well as studies of liquidity, they all point to markets moving higher. Now, that doesn't mean that they need to move higher every day or every month in lockstep, but the bottom line is that there should be a tailwind behind the market driving it higher. Not least of which because there is a growing corporate earnings base to work off of. US corporate earnings have been very high, very resilient, and their growth rate is orders of magnitude higher than in other developed markets, which should help push things higher. Now, when we take a look at more other evidence that has occurred, I always want to go back and point out, again, that a lot of the positive signals that we talked about in April and May, which pointed to sunnier days ahead in those dark days of the Trump tariff terror, so to speak, a lot of those signals are playing out very well and historically normal. So we should take some comfort from that. The other thing to point out as well is that post Jackson Hole, after Jerome Powell's speech, the market did deliver another powerful quantitative signal that indicates that more or less 13 times out of 14 would lead to markets being substantially higher, in fact, 23% higher. Now, if you want to take a look at a summary of that study, I did repost it on our X feed for the team, either under myself personally or under Kluge Wealth Advisory Group, if you want to look it up. But needless to say, it does, again, reinforce the idea that despite anxieties that we see expressed in media and other sources, that the direction of the market should be higher, and that would be completely normal. And again, I think that's something we have to remember, is that there's an enormous amount of skepticism out there. If we look at the surveys from the American Institute of Individual Investors, or we look at surveys of institutional investors or how investors in general are positioned, we see that investors are not positive, they're negative on the outlook, both in terms of what they're feeling and what they're doing. And historically, that is always correlated with extremely high forward returns. So although I do not want to be sitting here making predictions, I want to observe that if we are here a year from now and markets are substantially higher, that would be the most normal thing. It's not guaranteed, and it's not something that I'm predicting because I do not make predictions. However, if given the evidence that we have that the most normal thing is that things would be higher, I have to be positive, and we want to always focus on the fact that things have been very resilient. Think back over the last 5 years. How many challenges have we seen between COVID, between the lack of supply, then too much supply, then inflation, then the fastest rate hike cycle in history, then political events, et cetera, et cetera, et cetera. And what we see is that companies have become very, very adaptive. They've become very flexible, and they've been able to produce results from their businesses that no one has been able to expect, despite things that should have derailed everything. So despite all of the anxieties and the feeling of unsettling, the feeling of being unsettled out there that there is, we have to remember that there are enormous positives that are driving the market, and we want to keep our eyes on those because ultimately in the long term, that is what's going to allow us to be profitable and to help us to get you to where you want to be financially. Now, of course, if there's any questions you have on this, I can go into a little bit more detail. I realize it's a bit of a general overview, but please reach out, Calendly, phone call, email, what have you. We're happy to connect and to talk about things in a little more depth. Thank you. In wrapping things up here for the August Kluge Wealth Advisory Group Client Connect video, we touched a number of things. We talked about a portfolio update, we talked about a market update, And then we touched on a few of your frequently asked questions around market resilience, Bitcoin, as well as our outlook. So I would like to reiterate that if you have any questions, or is there anything on your mind in terms of your own personal financial situation you want to discuss, please reach out, give us a call. We're here to help. And you can reach us by email, by phone, by Calendly, or by any other way that you would wish. Again, give us a call. We are here to get the job done, and we'll look forward to speaking with each and every one of you very soon. Thank you.